Hello to all traders and welcome back to another non-farm payroll engagement hosted by myself, David Kinley, on behalf of Orbex. Very exciting times coming up as we enter, coming up to the last quarter, just another month to go until the end of the year. We're looking at the Fed's next move in its interest rate decision at the end of this month at its next meeting. What will be the main movers for gold, for the dollar, and for all the big movers in the market as well. So thank you very much for joining me. We'll be joined later by my special guest, Daniel, who will be going a little bit more in depth with where the American economy could go, and that could give us the signals for the next couple of months as well. So very exciting times. As I said, thank you very much for joining me. We are just looking now, just waiting for a couple more people to join, but we'll get straight into it because we want to not waste any time as the NFP is actually going to be potentially a bit surprising. It is expected to be a little bit more subdued than last time around, but we could see more surprises in store. So let me know if you can hear me okay. We've got the usual chat box as well. If you want to put any of your questions to me, any markets that you want me to look at, we'll be looking at the usual ones: euro, dollar, yen, pound, gold, oil, etc. So we'll just be seeing where the main movers are on the MT4 platform. But if you want to, as I said, highlight any other markets, please let me know. Nikhil, good to hear from you again. Always asking for gold. We'll get right into gold shortly. Just want to go through a quick disclaimer before we get into anything urgently. So as I said, as usual, this is just my take on the NFP and where we're going, where I think we might go, and what the possibilities are. So, we just want to highlight that, trading CFDs can be very highly speculative, and it could result in losses as well as profits as well. So as long as we're making the profits, the losses could happen as well. And foreign exchange and also trading in commodities, stocks, etc., is not always suitable for everyone, and risk capital should be applied. And this, as I said, this webinar is provided for information purposes only, and we can't say that it should serve as a basis for any investment decision. So let's just get right into it. As I said, it's my take on what we're looking at. So we're just seeing now where we're going to go as well. So before I go into the charts, I just want to have a quick look. As I said, I've got a couple of slides that I just look at the moment just to see where we're going. If we just look up here, 187,000 was the last reading. 170 is supposed to be the next one, but unemployment rate is expected to stay at 3.5%. So this could really have a good impact on where we're looking at for the NFP job numbers, because even though we could get a lesser reading at 170,000, because the unemployment rate will stay steady, it might not be such a bad NFP coming up as well. So this is very, very important to note as well. So just a quick brief look back at what the NFP has given us. This jump of nearly 500,000 new jobs added was quite a big step in the right direction. But obviously it's during the holiday season. This was in January of this year. But since then, we've had a steady move of just over 200,000 until the last couple of readings, which fell below 200,000, 185,000, 187,000 evidently. But we'll get more into that when Daniel joins us, because he, as I said, he looks a little bit more in depth into what to take on the charts as well. So the Fed as well, raising its rate last time around to the highest is 22 years, 5.25 to 5.5%. Almost at 6%. So are they going to raise another 25 basis points this time around? Well, at the Jackson Hole Symposium on the weekend, the Fed did say that they were going to possibly start moving higher with the Fed rates as well. So it's looking likely that we could have more of a jump on that as well. And just the last one, annual inflation, before we got into the charts, peaked up to 3.2%, the first jump notably since this time last year when the rate was at 9.1%, the inflation rate. But since then it's moving steadily downwards, but it's the first time we've had a jump from the last month as well. So what could that mean, and where are we going in the near term for that? We'll have to wait and see. But as I said, very exciting times. I'm just going to quickly share my other screen. So we're just looking at the markets now. So Nikhil, thank you very much. We'll start with gold, because we are certainly looking quite progressive on gold. So I've got it on the daily chart at the moment. I'll just zoom in for a little bit more clarity. So since we peaked above 2000 and actually hit a record high of just under 2080, and don't forget this was only in May, we've had this steady decline and a big sell-off. Now we're just seeing where the next signal will go. Well, since we hit 1900, we got a nice support here at that particular area at 1900, and this was not so long ago. This was at the back end of June, so only a few months ago. Then we had a push back up to 2000, but it actually had a falter, had a heavy resistance roughly about the 1980 area and before we started moving back down low. But look at this tremendous sell-off that we've seen back down below 1900, which is quite significant, but very strong double bottom here, roughly around the 1885 handle. And this gave a lot of gold buyers a big impetus that prices will keep moving higher. And we are now looking to see another push to the upside. So very, very choppy action at the moment. Well, in the last few trading sessions with gold, we've seen what the yellow metal has been doing. But gold has been, you know, a little bit like Bitcoin in the fact that when it does get volatile, it's jumping over $10, $20, $30 in one single trading session. So the fact that we're trading roughly just below 1950 at the moment doesn't really surprise us too much, because this V-shaped recovery could actually come into play possibly before the end of this trading session, actually, depending on where the NFP numbers are. I mean, if you think 19.8 is trading just below 1950 now, another $30 move in today's trading session isn't really out of the question if you think about it. And we could see this V-shaped recovery. However, if we do see a recovery, it could be probably limited roughly about 1980, where we were seeing at the last reading. So this is the take on gold. It's very interesting because gold can be very, very exciting. It throws up a lot of opportunities, obviously very volatile, can be risky, but throws up a lot of opportunities as well. So I'm just going to break it down to the 4-hour chart just to see where we're looking at now. As I said, I had this strong, on the 4-hour chart, you can see it's more of a triple bottom here. So we had this strong resistance area, support area here before moving higher. So we've had correction after correction, wave after wave. Now we're just consolidating slightly. And this consolidation had started happening. I'll put it on the 1-hour chart as well, so it's a little bit easier to see. Consolidation started to happen due to the next round of big data, which is obviously the NFP. So we're just waiting to see now that if we're going to move out of this kind of descending channel and having some resistance back up at this top end as well. So as you can see here, we did have, apart from this slight false spike here, we've had another 1, 2, and now we're having the third test. If you maybe 2 tests, because this looks like a false break to me. So we're having 2 tests at the moment, and we'll see if we can break this top peak of 1948. So this is what I'll be looking at as we go on the NFP trading. But if we are expected a weak dollar in this trading session due to the fact that the NFP job numbers are supposed to be lower than last time around, then we could be seeing possibly a spike in gold, but it just depends on how much that spike will be as well. So very, very exciting times, and very looking forward to this NFP actually, because it could throw up some good opportunities on gold. So this is what we're looking at now. So thank you, Nikhil, and thanks to all that have joined me today. Keep your questions coming. Anything you need to know, let me know, and we will go on from here. So euro dollar, another very important instrument that we've been looking at, because as you can see, since we've had this push above 112 a few trading sessions ago, we've had this vast sell-off of nearly 500 pips. So that has always thank you too. Keep your questions coming. So this $500 pip move from only a few weeks ago. Don't forget, this is in July. We just turned into September now. But if you think August and then before that July, 5-6 weeks of 500 pips, it is quite astonishing. So we're seeing a slight pickup in the euro dollar now. But as you can see, just bring it down to the 4-hour chart. As you can see here, since then we had 150 pip move to the upside, but that sell-off has pretty much began already. So we're expecting now another V-shaped recovery to the downside, obviously depending on the NFP numbers as well. But it's expected to be slightly moving after the NFP has been and gone. Obviously, after the big noise in the market has moved, we could see a progressive 50 pip move to the downside. But obviously, the last particular time we were down there, it was quite significant because we did drop below the 108 handle for the first time in a while. So that didn't happen since June. So, but because that did happen in June, as you can see here, 500 pips moved to the upside, and they were moving back down as well. So it just gives us the worry that the euro dollar could start collapsing even further if we do get, good jobs data, but also the European Central Bank having some difficulties as well. So this is our take on the euro dollar as well. We'll go on the 1 hour chart just briefly. So just consolidating now, we'll find that before the NFP is beginning, you'll find a lot of markets consolidating. There won't really be so many big moves in the market on that particular day. You could say this particular candlestick, it's just got over 10 pips, which is nothing really. This happens nearly every hour, quite significantly. But we'll just see if we can break out this particular area, particular consolidation area, and then we'll see where we can go to as well. Will we go back up to 110 or the higher areas of 109? We'll wait and see. But as I said, once again, very, very exciting time. So dollar yen's been quite interesting because, like the euro dollar, we've been progressively moving in favor of the dollar. So as you can see here, big waves, big strides on the daily chart, and it looks like possibly, as I said, one wave, slight correction, and now we're moving back above this previous high. We're actually on the previous high, actually, so that will be quite interesting if that does break. So let's just zoom in so it's a bit easier to see. As you can see here, we are literally trading on this particular line here. So if we do break lower, it'll be interesting to see how far lower we can get, because if it is going to correct and start moving higher again, I'll just move this line so it doesn't get too confusing. So if we do break and then correct and start moving higher again, it will be very exciting to see if we can get back up to 150. That will be quite interesting as well. But very, very nice movements on the dollar yen, as you can see here. Big move to the upside, moving over 1,000 pips there. So, and then we're moving lower, and then a correction, and then moving higher as well. So that's quite interesting. So Akim, thank you very much for joining. What of pound dollar? Let's go right onto the pound dollar on cable. So pound dollar, the last time we looked at it, I was looking at all the combinations we could be seeing. Obviously, the last time it broke out of quite a significant descending channel here before it started spiking up. And as you can see here on the daily chart, we're moving higher in wave degrees, correction, moving higher. But as you can see here, now we are in a bit more of a descending channel, because it is looking likely that cable is falling a bit lower than just the odd correction. If we look back at these particular corrections here, they've just been a bit smaller, but we've started moving higher, as you can see. And then a small correction here, and then moving back higher again. But now we are moving in a more of a deep correction, and it looks like it could actually continue as well. Trading at just below the 126.80 area at the moment. So cable could actually start progressing a little bit lower. I'm a bit worried about cable. If it keeps on moving lower, we could see these particular support levels being tested roughly at the mid 125 handle, and then moving down to the lower regions of 123. So we could lose a couple of hundred pips on cable if the jobs number is looking quite good. But sterling and the UK in general, they're not in a good place at the moment. There is quite a lot of hostility in the UK Parliament. Rishi Sunak is looking likely that he will lose the next general election when there is one. So there is a lot of factors really moving away from the pound at the moment. And as you can see here, the last time we peaked at the pound was in the middle of January. So since then, we've had over 500 pip sell-off. So we're just looking now if that's going to keep continuing, Akem, if we're going to keep on moving lower, and where that would lead for cable as well. So thank you for your question. Keep your questions coming, and we will move right on. I hope that answered everything. And actually, let's just look on the 4-hour chart, because I just want to move a bit more in depth on the intraday channel. So as you can see here, very, very bearish channel really starting to take shape. These lower highs that we're seeing, it really gives us the signal that this will continue. So the next port of call, the next action I'll be seeing, I'll put it on the 1-hour chart now. This is the last, as I said, consolidation again, because we're waiting for the NFP to be released, and we're just seeing now price action really starting to be very choppy since this big swing in the market. But this is only like 10 pips, so it's not really too volatile at the moment. But we could see quite a bit more of a move to the downside as well. So last time around, I was looking at the Dow, but I had a few requests to look on the NASDAQ as well, because the NASDAQ has really taken off quite significantly, as well as the S&P, due to the big corporate earnings that we've seen. The companies really releasing really substantial earnings on their season last time around. So as you can see here, real big push up from the end of the year, moving higher and higher and higher. I mean, moving over 5,000 points, which is quite significant as well. And we're just having a bit of a sell-off at the moment before peaking higher. So let's just look on the 4-hour chart. So very, very choppy V-shaped recovery. It's looking likely that it's moving into a harmonic pattern at the moment. If we just draw some harmonic shapes on it, it is looking likely that price action will start moving a bit higher as well. So this could really start seeing more of a move to the upside as well. Sorry, if we do get this particular resistance area, obviously harmonic patterns are reversal patterns. So once we've reached it, we can start moving a bit lower as well. So that's going to be something to keep an eye out for as well. So thank you for your comments, Akem. So yes, I'm worried about cable as well. It hasn't really defined where it wants to go. Bit choppy at the moment, bit consolidated. And if we bring it back to the daily chart, as you can see here, I'm just worried that we could actually keep falling on this particular bearish channel that we're in. As I said, the corrections that we've seen time and time again in the past few months have seen just a small correction, just a few pips. Like I said, let's just check quickly. So, just over 300 pips in a slight correction. This one was just over 200, but now we're seeing this correction being over 600 pips. So almost double, or over double last time around. So this is a bit of a worrying thing for cable, that's for sure, Ikem. So thank you for your comments. And as I say, keep your questions coming. We'll be seeing what is in store shortly as well. Looking on dollar CAD as well. Hi, Pal Singh. Yes, don't jump straight into there'll be a retracement and two-way price action, still favorable, dollar down. Yes, yes, this is a good point, actually. When we see retracements in the market, we do actually wait for the next move. So is it a retracement? Is it a full-blown rebound on the currency pair or commodity that you're trading? We'll have to wait and see. So we'll wait and see what happens. So yes, I would agree with that. But let's wait and see. If we're looking at cable, if we look at euro dollar, if we're looking at the commodities such as gold or silver, it's really looking likely that we're going to be moving a bit more. So just under 10 minutes to go until the NFP. Let's just see if anything's changed. So no, still the consensus is 170,000 versus 187,000 last time around. Unemployment rate still going to be 3.5% as a good figure. And don't forget, we've got ISM manufacturing PMI just over an hour after the NFP. That's supposed to be a little bit better around. So we could see a little bit more of a favorable, sorry about that, it's just a little bit more of a favorable move to the upside, and we'll see if that's going to have any repercussions whatsoever in moving that forward as well. So we're just waiting now if we're going to have any big moves in the market. We'll still continue with the markets though, because I just want to have another look on gold before we go into the NFP. And obviously we've got the loonie, aka the dollar CAD as well. So we're just waiting to see what is next. So let's just look on the dollar CAD as well. So daily chart. This was interesting to me because we had this, again, harmonic pattern kind of starting to develop here. And since we've probably reached the top end of this harmonic pattern, we have now possibly hit this heavy resistance before moving a bit lower. So as you can see here, we're hitting a bit of a resistance and now moving lower. So we're just waiting if it's going to start moving lower, and then we're going to go and see. So another question. So is it going to go up on gold? Well, gold is looking, let's just go back on gold actually, because it seems to be a bit more popular for a lot of our traders and guests alike. So for me, gold, you know, since we had this bounce in the last time around, just put it on the daily chart, we had this bounce at 1900 and then we moved higher towards 1980, which was fine. We knew that it wasn't really going to start testing 2000 anytime soon. Then we had the major sell-off on gold, you know, over $100 move, and we actually broke 1900, had a confirmation, and we're going to possibly see, we saw another bounce, a triple bottom, roughly about the lower end of 1880. Now we're seeing another $40 to $50 move to the upside, and we're just waiting to see if we're going to have any more of a move even higher. This is what the main point is that I want to try and point out at the moment. Are we going to hit 2000 before the end of this month? If the Fed is going to still be hawkish on its policy tightening. If you remember, for most of 2022, which was when the Fed was hiking its basis points by 75 at a time, you saw the powerful move on dollar, and the dollar index went up to $114, euro dollar, pound dollar, all collapsed quite significantly in favor of the dollar. And then, as you can see, when the Fed did start easing and moving to 25 basis points at a time, you saw what happened. It was a big rebound. And obviously this is what happened in gold as well, the opposite really. So we had this spike to the upside and then more of a move to the downside as well. Pal, thank you for your comment. Careful on gold. That's been reacting the new only. It's very frustrating. Yes, we're just, it has been very frustrating because at the moment we were getting signs that we were going to start testing 2000, but we had heavy resistance at 1980. Now we moved lower. Excuse me. Then we had another move upside to, well, we're still in this kind of upside move at the moment. We'll bring it back down to the 4-hour chart. We're in this upside move still at the moment. So we're just seeing now that price action is moving to the upside as well. So again, 1944, 1945, we're trading on at the moment. And we're just seeing if this is going to have anything in the moderation of any of July's and August gains. Obviously, the NFP number for the last couple of times around was very, very good as well. But yes, power news does actually pay a chaotic price. Yes, when we were trading big fundamental news events such as the NFP, such as the FOMC, Federal Reserve interest rate decisions, ECB interest rate decisions, you know, big central banks making big moves, you do get a lot of volatility. However, it could stay back on track. So what we're talking about, what I mean about that is, if we do get a favorable number for the NFP, we could see dollar do something like this and start moving towards 1920. But after all the noise has died down, after, you know, come Monday morning when the trading session opens, we could actually start continuing back on track, and gold could start bouncing back to where it was before. So this is what we're really looking at as well. If gold is going to start, it's going to keep on moving higher and if it's going to keep on pushing quite progressively as well. So currently looking at roughly 1950 as a bit of a psychological target. So as we just move under 5 minutes away until the NFP is live. If you want me to look on any other charts, guys, let me know. But yeah, the conversation is flowing quite nicely on the chat. I've had a few of opinions, but keep your opinions coming. Let me know where you think the pairs are going, the commodities are going, because it's good to get some feedback if we're going to see where price action is going to take the next move for these big pairs and big movers in the market as well. So just going back to euro dollar, let's bring all these down on the hourly chart now, because I just want to actually, let's go 30 minutes so we can see exactly where we're going. And so already dollar yen is falling quite significantly at the moment. Just put this on the 30-minute chart. So as I said, if we break out of this for gold to the upside, I'll be expecting at least 1950, a $5 move to be tested roughly about this area here. And we are expecting a weak dollar. Don't forget, the NFP numbers are down. So it only takes any good, exciting news. And that's right, pal. This will be a good NFP. You're expecting some fireworks. Let's hope so. Indeed, because we are seeing possibly if the unemployment rate does dip to does spike a little bit more to 3.6%, then this could be very, very detrimental for the dollar. So this will all start happening in just over 2 minutes. So this is very, very getting very close. So let's just bring this down as well. So we've got cable as well, dollar CAD. NASDAQ, as I said, had a few, I usually look on the Dow this time around, but the NASDAQ is really starting to be more popular at the moment. And Daniel has just joined me at the moment. Let's just let him in. Hi, Daniel, can you hear me?
Hey, David, I think it's working, hopefully.
Yeah, it's good. You're just joining us with 2 minutes to go before the news release. So
being late.
better late than never, I guess.
Yeah, it's been a little hectic day going on there.
Yeah.
Hopefully, it's going to be a little bit more active in the markets than it was last time, I guess.
Yes, well, I was just telling our viewers that unemployment rate is expected to be stable. However, all we need is that slight uptick in unemployment data, and it could actually send the markets a bit crazy, because the NFP numbers are supposedly are going to be a little bit more less than last time around. So
yeah,
I mean, what's your take if we do get a bit more of a spike on unemployment? Do you think it would be that detrimental?
Yeah, there's still a kind of unsure about what the Fed is going to do. So if you get above 200,000 again, most likely the people are going to start factoring in that the Fed will do still that one rate hike. It's still that debate whether they're going to hike in November or not, and so that could push up yields, because over the last week so far, you had the dollar's been it's been losing a little bit of strength, mostly because of people thinking that they're not going to go through with that final hike. And so then, of course, it's today's data, and then not next week, but the week after, we get the CPI, and those two things are going to be the really important thing for September. And it's like, I think it's 98% or something like that of people traders are expecting the Fed to not do anything in September. So everyone's going to be really focusing on, it's November, one more hike or not, basically. And so, if the other thing is, if NFP is below 90, which is considered the replacement rate, then it could also be like a pretty strong sign. No more hiking. Maybe it's time to start talking about cuts. So they could also provide another surprise there too.
Exactly. So to hike or not to hike, that is the question.
Yeah.
At the moment. Okay, Daniel. So just a few seconds to go before the news announcement. Also got GDP data from Canada. So dollar CAD could be something to watch out for.
Oh yeah, the Canadians always there and always forgotten.
Exactly, yeah. So just data coming in now. So 170 was the consensus, and we've had 187. So just a bit higher than what was expected, but nothing really too much. Oh, but the unemployment rate is coming at 3.8%
Yeah,
versus
that's a bit of a
3.5.
surprise because the
Yes.
participation rate is the also participation rate went up 2%. So
Yeah,
comes out
0.2%. So
3.6. Yeah, I guess you could get a bigger reaction. I think maybe is in gold might and have a little bit of a stronger response in the currencies there.
yeah, well, gold spiked up over $7 at the moment. We did
Oh,
have a
right.
bit of
Yeah.
a psychological level at 1950. It's just above, well, just at 1952 now. So I'll just see if that keeps on pushing as well. So that's quite, it's quite a big move on gold at the moment. In the first few seconds, that is.
Yeah, there might be some more components that come out that'll fade it. Like, oh yeah, the other thing here's the U2. I mean, the U6 unemployment rate also went up. So I guess it's probably going on with what you had with the jolts earlier that has that thing that they've been talking about. What we've been talking about for like several months now, where you have the
Yeah.
number of open jobs and the number of people looking for jobs. There's a massive gap there, and so with the
Yes,
jolts
yes.
number, it went down significantly, uh,
Hmm.
much more than was expected, and so that's kind of really showing that there's signs of weakness in the labor market. And so then,
Hmm.
if the labor market is going weak, you see the unemployment rate going up, then that would be a sign for the Fed mostly that the inflationary pressures from the labor market are be going down, and so then the Fed would be less likely to hike.
Exactly. They did say in the Jackson Hole they're going to just most probably do another hike of at least 25
Yeah,
basis points, but also bringing in the data as well. They did have a positive look on the jobs number now, but it's not something to dance the night away to. Let's say I don't
yeah,
know if there's a big expression because it's still subdued below 200,000 new
yeah.
jobs added. And if we look back at most of this year, we have had over 200,000 jobs being added every NFP reading. So is it a bit worrying for the Fed, do you think? Or and don't forget, I was pointing out as well, the annual inflation rate did pick up slightly for the first time in over a year. We were at 3%, now we're at 3.2%, where month on month we were dropping from 9.1%, 8%, 7%, 6.5, etc., etc.
Yeah,
And last month was the first time
they
we had a
get a
little
little
bit
bit.
of a spike.
You get a
Yeah,
correction. Yeah.
it got a slight correction. So that's something they're probably looking at as well. That inflation is not so tamed at the moment. It is still a little bit risky for them.
Yeah, it's the thing that the final push is would probably be the hardest. And also, if you look at, for example, the average hourly earnings, they're growing at 4%. So that means, and the inflation rate is going at 3%. So that means people now are supposedly, according to the statistics at least, they have 4% more
Yeah.
money that they would presumably go out and spend, so that it creates an increased pressure on inflation because if prices
Hmm.
aren't going up to match, that would work fine if you have increasing production. But if we look at the other data, the empire manufacturing numbers, you see that industrial production in the United States isn't going up along the same at the same rate. It's actually going down. So if you have lower product falling productivity and the increasing amount of money that people have, this kind of really keeps the inflationary pressure going. So yeah, I
Yeah.
mean, I guess the thing about the numbers is that it's kind of in the middle where people expected, and then you get the unexpected increase in the participation rate, which would also probably I don't know if that would lead to some fading. Um,
Yeah.
because that means that more people are going out trying to get jobs, which isn't a sign that the unemployment or that the labor market is weak, but it is a sign of people needing more money, and so that might be a sign that the economy isn't doing so well, and so that might be throw another wrench in the thing because it might not be that the Fed wants to raise rates, but if the economic indicators, because again we had the Q2 GDP was revised lower, and then
Yeah.
so that they could also be saying the Fed could also be thinking now, hey, the economy might be not doing so well, and do we really need to do that extra 25 especially if inflation is coming down. But then, of course, there's the thing that inflation, as you mentioned, just went up a little bit. But it was kind of expected
Yeah.
because of the base effects. Because last year the unemployment, the inflation rate wasn't going up as fast as it is going up now. So yeah, there's kind of expectation that the inflation rate would go up a little bit to a maximum of about 3.4, 3.5, and then start going back down again in December. So yeah, there's a lot of moving parts to it.
Exactly. Or we can just print more cash, mate, maybe, and that might solve the
Yeah,
problem.
that's the thing, is that they're really eager to print more cash. Like every time that there's an opportunity to do it, like back in March, they
Yeah,
reversed their quantitative tightening by a huge amount. And so what the Fed could do is sort of like a little bit of stealth easing, in the sense that they just, again, what happened in March is where they just stopped doing their tightening, and there was no announcement. They just go and said, well, we're not going to be rolling off as many bonds just for the next month or so. And so then that might be
exactly.
one of the ways that they ease through, they push in 25 basis points, but then they don't actually go through with buying the 90 billion in bonds or something like
Yeah,
that.
exactly. One thing I want to ask you, Daniel, just want to pick your brains. We had a question about cable, about pound dollar earlier on,
Hmm.
and I just wanted to ask you, with going to the other side of the pond now towards the UK markets, with the UK Parliament being in a bit of a disarray, because apparently, if there is a general election that's going to happen,
Oh, right. Yeah.
the the current Conservative Party might be kicked out,
Hmm.
because they've been in there now like over 10 years. I think people are just getting a bit fed up, and it's time for new leadership and everything.
Yeah, that
If that
happens.
does happen, yeah, if that does happen, obviously we've still got Brexit kind of hanging over like a dark cloud at the moment, a rainy, gloomy cloud that's about to,
Give,
fire lightning bolts again.
yeah.
Where do you see cable going? I mean, we've had correction after correction for cable, but now it seems to be sliding quite significantly back down to monthly lows. And could this all boil over at some point and start moving lower for cable?
Yeah, that's always the risk, because the UK kind of is in the more complicated situation.
Mm,
Again, because of the Bank of England was kind of slow to bring up rates, and so you had the
yeah.
higher inflation.
Hmm.
But also the UK is a little bit better off than Europe, in the sense of its economy is doing a little bit better. Europe is just like struggling, barely getting by on. You know, Essentially, their economy is flat, is stagnated, because they technically not in a recession because the growth is zero, kind of thing. And so in the UK,
It's kind of feeding off the scraps at the moment,
yeah,
isn't it?
yeah, that's a better way of putting it. And so
Yeah.
the UK has the ability to sort of get a rebound for the pound if the economy gets going. But the problem is, because the Bank of England is going after inflation, and the rates have to keep going up, then the economy might not take off. So right now there's sort of I guess the pound has been a little bit under pressure, because there's kind of speculation that the BOE will finally bring its campaign to an end, and then that might and then if the Fed goes forward with their rate hike and the Bank of England doesn't, or doesn't go as aggressively, then you get the interest rate spread going through, sort of shrinking a little bit. But the thing is, you have the problem, as you mentioned, with Brexit,
Yeah.
that keeps getting in the way of trade. Recently, the
Yes.
UK had to postpone the implementation of one of the policies, because it would increase the cost of goods that are coming from Europe, and
Hmm.
that's one of the drivers of inflation, is because the cost. Britain imports so much food from Europe, and the cost, and specifically the cost from products from Spain, were increasing. They were putting the large pressure on inflation. So again, the other thing is, labor is kind of more pro EU, but that doesn't necessarily mean that the EU is going to be more pro UK in the rapprochement over the the Brexit issue. So
Yeah.
it creates more uncertainty, and so probably a lot of people, more investors, might be thinking, well, we don't know what a Labour government's going to be like, so maybe let's just stay out of the pound for a little while, see how the whole Brexit thing
That's probably a good idea, actually. Yeah, let's just stay out of it for a while and see what happens next year.
yeah.
Enjoy your Christmas.
Yeah,
um,
the general election, I think, is when it's in like April, March, April, somewhere around there, in the beginning of spring, something like that. Well, there,
yes, yeah, yeah.
it's not firm, right? I guess.
Yeah, exactly. What's interesting, Daniel, about this NFP though, is like when we get spikes of the market across the board, which we have done, they're kind of holding their own at the moment, especially like dollar CAD, gold, dollar yen. We usually get like some kind of retracement by now. It's been 10 minutes after the news data, but it seems likely that it's kind of holding its own. Okay, euro, as I say that, euro, dollar, and cable are retracing a bit, but not to the point where it's gone back as like a doji candlestick, where we're going back to the point of where we started.
Right.
It's, I mean, is this giving us the fact that there is a bit more of a weaker dollar in that sense? Then, I mean, it has been a bit subdued. Obviously, we've got participation rate versus unemployment rate, which is keeping things a bit in the balance. But for the unemployment rate in general to jump to 3.8%, it's not a great reading, let's say, is it? If you
Yeah.
look on the historical charts, in a few months' time, if we see this spike to 3.8%, it doesn't look for good reading, does it?
Yeah, and it's also there's the other components that are going through it that also aren't particularly all that positive. You have
Yeah,
the average earnings are down a little bit,
yeah,
and of course the U2 unemployment rate it spiked up higher as well. So it does seem to be sort of pushing the general idea that there won't be another hike from the Fed in November. I guess
yeah.
it would be good to see. I guess it would be definitely confirmed with the CPI data that comes out in a week and 2 days or something like that. So,
Yeah.
but yeah, it seems like we might not get as much of a fade. Particularly, I would guess
Hmm.
in gold and in the CAD. I didn't. The CAD data came flashing across, but I didn't see what happened with the GDP. So maybe the GDP in the Canadian GDP came up a little bit better than expected.
Yeah.
But also the Bank of Canada is kind of pretty much firm in their not moving right now. So
Hmm.
also, I guess that means if the Fed doesn't move, then their rates, their yields stay pretty stable, and that would
Yeah.
actually end up helping the CAD at the Canadian dollar at the moment. I think. Yeah,
Yeah.
pretty much.
Exactly. It looks like you start because the CAD is actually spiking quite significantly as well. So
Oh yeah,
that's
that's the other
actually,
thing, of course, is that if the dollar gets weaker, then the price of crude is going to be going up. That also help the Canadians there as well.
yeah, we did have a bit of a session last week about oil in general, and it looks like it could possibly be back up to $100 by the end of the year. But it did that a couple of years ago. I think in
Yeah.
2021, where it was steadily increasing, and then by the end of the year, it went to $100. So we could be seeing possibly history repeating itself in that
Yeah,
sense.
that'd be also kind of funny because what was it, Goldman Sachs at the beginning of the year said it's going to reach 100 at the end of the year, and then somewhere
Yeah,
around late March they said no, it's not going to reach 100. If it actually does.
yeah, exactly. Let's increase the price of oil then
Yeah.
around the world, just to teach people. Okay, Daniel, great. Well, yeah, I was going to say thank you very much for joining me again.
Hmm. Thanks
And
for the
yeah, it's
invite
been
as usual.
no problems. It's been great insight. It's been quite an informative NFP this time around because we have had some good spikes. Usually it's like a 10, 20 spike, a pip spike on most of the pairs, or just a $5 move on gold or something. But now we've had quite a good significant jump and across the board. And it looks like they're holding their own. As I said, we've
Yeah.
had some slight retracements, but not, complete retracements back to 0%. So it's been very good. So thank you, Daniel,
Mhm.
and have a great rest of the day, and we'll catch up next time.
Yeah. Have a good weekend and happy trading for everyone else.
Thank you so much, Daniel, and we'll speak again next time.
Okay. Take care.
Okay, bye. Bye for now. Bye. Okay, so great. That was Daniel. So, Akim, can you remember the high impact news that relates with NFP that usually comes out first and usually predicts the NFP direction? Well, the thing is with the NFP, if you look on your trading calendars or financial calendars, just to see what the rumors are for the NFP numbers. So the rumors were before this that the non-farm payrolls was going to be 170,000. It did change a little bit over the past few weeks. 2 weeks before the NFP, we get a number, let's say, whatever it would be. And then as we creep up to the NFP, we get that confirmation number of what it should be. It was 170,000 this time around. The actual figure is 187,000. So because there's a 17,000 difference in the job number, this is why we're seeing a bit more of a spike, and the unemployment rate, which comes out at the same time as NFP. These are things to look out as well. Average hourly earnings. This is something else that comes out at the same time as the NFP. So all these factors combined really start pushing the NFP numbers, and obviously the pound, the dollar pairs, and what we're looking for as well. So what's the best trading calendar for fast news numbers? Well, personally, I use Trading Economics, tradingeconomics.com calendar. That gives me, or we have a trading calendar on our website at orbex.com. This is very fast paced, and this is actually quite informative as well. I can send the link here, actually. Just bear with me. But yeah, always have your calendar open. The NFP is usually the first Friday of the month. Sometimes with dollar holidays such as the 4th of July or something, it usually has a different, it could actually be delayed 1 week or so. But this is what we are usually looking at as well. So this is just something to look at and keep a view of what's going on as well. So I'll just put you the link in here for our economic calendar. As I said, this is right up to date. It always gives me what I need up to date, and the numbers come through quite significantly as well. So as you can see, if you check out the link, non-farm payrolls 187 actual versus revised, versus 157, which was the previous reading around. So this is very, very important that you have your calendar ready. So you are welcome. Thank you so much. As I said, anything else before we end the NFP webinar, please let me know. So let's just take a look on the charts then one by one, just to see where we're going. So euro dollar, so we spiked up 40 pips, but it's still holding its own. If we look from where it was just over 20 pips, usually for the NFP, we get a spike in the market and then a quick retracement. But as you can see on the charts, it's really starting to hold on and giving us that 20 pip move. But it'd be interesting to see if we do get back down to the channel that I pointed out at the beginning of just before the NFP was released. If we do move a couple more pips down and we get some resistance about the 108.60 area, we'll see if that can move even lower down. Gold as well. Gold has been quite outstanding, but as you can see, the 1950 handle, which is what I pointed out beforehand, is now being tested. So we're just spiking above 1950 previously when the NFP was released, when the news data did come out just under 20 minutes ago. But now we're seeing prices just testing that particular area at the moment. So just keep an eye on that psychological zone. When I talk about psychological zones, I'm talking about 1900, 1950, 2000, etc. Excuse me. If we're going up or down in $10 or $20, they're good psychological areas and levels every time. Dollar yen as well, that's collapsed quite significantly and is still moving lower. That's very advantageous for a lot of traders, over nearly 60 pips at the moment. And as you can see here, if we bring it to a 4-hour chart, we are just now, as you can see, very nice level on the last low. So it probably will find some support here, because that was the last low that we saw. Nice V-shaped recovery to the downside. Very, very significant. Very bearish candlestick. Haven't seen a 4-hour candlestick like that in a while. We saw it here, but live, haven't seen that in quite a while. So very significant there. NASDAQ as well. Naturally, we saw a spike in the NASDAQ, even though we did get a bit of a move against the dollar, Nasdaq and S&P, and we'll see what is going to happen in the next hour. Yes, that's right, Pal Singh. We will be seeing what's going to happen in the next hour or so. As I said, keep your charts open if you are still trading this day, because we've got the ISM manufacturing numbers coming up in just over an hour. And that's just looking likely that it will be a little bit better reading. So we're seeing now if that's going to have any potential moves as well. Dollar CAD, that's just started to retrace. It's 50% retraced at the moment. Excuse me. Moving just shy, just under 60 pips. And now we're just down to roughly about 40 pips. So again, it was natural and quite obvious that we would find a bit of resistance at this particular area. That was the last swing high, the last spike that we saw. Again, as you can see here, 135.50. That was the next move to the upside. And lastly, on cable, had a lot of attention on cable the last lot of questions as well, which is good. That's actually broken and maintained its stance. So we could see cable actually keep pushing a bit higher for the rest of today's session. Wouldn't surprise me if we did jump possibly another 30, 40 pips to the upside to test these particular levels here to the mid 127 level. Just currently trading above 127 at the moment. Could that be a psychological hurdle for cable as we get into the latter stages of this trading session as well? So thank you very much for joining me today. I'll be online and keep on answering any questions you might have. Obviously, I'll just leave the charts on for a little bit longer. And yes, power cable looks a good buy only when candles close. Yes, it's true. We're just waiting now. If I put it on the 15-minute chart, just waiting now if cable will still stay above this last high. We could put in another buy. Well, I could put in another buy position. And it could actually keep on pushing higher. So yes, I agree with that. That is actually quite a good projection there, that it would actually keep on pushing higher. So we'll see what happens. So once again, thank you very much for joining me. I'll end the presentation now, but I'll still be on the chat, still be online to answer any questions you might have. And it's been quite an eventful NFP. So, you know, all I can say is we can't wait for next time around. By then, we'll have another FOMC meeting to see what the Fed is going to do. If we're going to have any more jumps on the dollar, if we're going to have any moves on gold, and then we'll see where that's going to go as well. So thank you very much for joining me once again. It's been a pleasure, and have a great trading day ahead. Have a great weekend ahead, and we'll speak next time. Bye for now.